Hey everyone, I'm Sean Gander with Simplify Accounting, and today we're diving into Canadian GST on short-term rentals. This could be VRBOs, it could be self-managed short-term rentals, but I'm going to be referring to them as AirBNB's, and there is going to be a little bit of a focus on AirBNB's throughout. If you own an Airbnb, you need to watch this video because in addition to some really great GST advice, I'm going to go into some specific situations and scenarios that can trigger tax events, such as selling your property, converting it into a long-term rental, or even moving into it. Things can get hairy pretty fast, so buckle up and let's dive into this. So what's Airbnb's position on GST? Well, they handle it for you unless you have a GST number, in which case you need to provide that GST number to Airbnb and deal with it yourself. This could change in the future. It's changed before, and every platform is a little bit different. And so if you're using VRBO or another platform, you should check with them to see what their position is on GST. Should you register for GST? Well, GST is applicable on any short-term accommodations, which would be rentals that are less than 30 days long, but you don't need to register if you're earning under $30,000 over any 4 consecutive calendar quarters. This threshold is for any GST applicable revenue that you earn. So if you have a home-based business or a corporation or any other sources of GST applicable revenue, you need to add all of that up with your Airbnb revenue. If you're over 30 grand, you should really register. If you're under that threshold, you don't need to register. But should you? Well, the nice thing about registering for GST is that you can claim something called input tax credits, or ITCs. Essentially, when you buy stuff for your business or your Airbnb, you can subtract any of that GST paid against the GST you've collected. So if you paid more GST than you've collected, you get a refund. So even if you're under that $30,000 threshold, you may want to register for GST just so you can claim the GST that you're paying on expenses. The downside of registering is that you need to track all your GST and you need to file those GST returns. You already need to track the revenue and expenses with Airbnb, so it's not a huge deal breaking out that GST and going that extra mile, but it is an extra thing to do, so it's something to think about. And if you register and you end up not filing those GST returns, you're gonna get hit with interest and penalties. Like, it's just, you have to file those GST returns if you register, so that's the downside. What if you're over $30,000 in Airbnb revenue and you don't register? I mean, Airbnb is dealing with it for you, right? They're collecting or remitted it on your behalf. So I register. Well, if you're over that $30,000 threshold, they want to see you register. And if the CRA were to audit you, the onus would be on you to prove that Airbnb actually collected and remitted all that GST. And as of today, you cannot prove that. Airbnb does not provide specific tax details or summaries to their hosts, and they will not help get the CRA off of your back. In fact, when Airbnb charges GST on your booking fee, they call it occupancy taxes. They don't even call it GST. They aren't following Canadian sales tax legislation requirements, and the CRA won't accept those reservation confirmations as proof that they collected and remitted GST on your behalf. So if you're over that $30,000 in revenue, don't rely on Airbnb's collection remittance process, just register for GST. Now that you've registered for GST, how do you add it to your listing? Well, let me tell you this, it's not that complicated. It's relatively simple, but my wife and I, we bought an Airbnb recently, and I really struggled trying to figure out how to do this. I contacted support. They weren't very helpful. I ended up just having to go in and figure it out myself. And so here's a tip specific to Airbnb's on how you can add this tax to your listing. If you go to your listings, click on the specific property. You're going to want to do this with all of your properties if you're a GST registrant. You go to those 3 little dots to preferences and then choose taxes, custom tax collection, and click add a tax. Now under here, you'll see that you can choose a tax type. You could choose, I would just say VAT/GST. Type of charge, I'd do percentage per booking. And then the amount, it depends. If you're doing HST, that'll be different than straight GST. If you're in a province where you have to charge PST on top of the GST on your short-term rental, then you should probably include that too. And so you really need to figure out for your province, your jurisdiction, all of the taxes that you're supposed to be charging on this rental. and make sure that they are in it. You also should tick off the taxable base. And so GST has to be charged on pretty much all of these service items, the base price, management fees, resort fees, cleaning fees, etc. PST or other provincial requirements, you'd have to look into that. I wouldn't put a cap per night, business tax ID, and accommodations tax registration number. You'll want to put your CRA GST number in there. And then, does your jurisdiction provide exemptions for long-term stays? You can click yes, and you can click bookings over, say, 31 days are non-taxable. Confirm and add it. And then after adding that, I will show you a recent reservation that we have here, and you'll see that Airbnb has $3.74 in occupancy taxes. That is 5% of their guest service fee, the $74.82. And then they also charge $26.50 in property use taxes. That's the GST that they collected on the booking fee of $450 plus the cleaning fee of $80. And then you'll see in the host payout that they're paying those property use taxes or that GST out to me so that I can go and remit that to the CRA. So that's what it'll look like on your reservation confirmation once you've added your sales tax into Airbnb. Let's hop into some serious tax consequences that can get triggered from 4 different events. First of all, I'm going to talk about selling your Airbnb. When you sell your Airbnb, you'll likely need to charge GST on the full sale price of the house. So make sure this is disclosed in the listing. This is important because if you don't charge GST, then the CRA may come and make you back pay all that GST plus interest and penalties, which sounds kind of crazy, right? Well, check out this Tax Court of Canada case in March of 2024, where someone bought a used condo in Ottawa in 2008. They used it as a long-term rental until 2017, at which point they rented it on Airbnb for a year, and they made 54 grand during that time period. Then they sold it in 2018, so a year later, didn't charge GST on the sale price. The CRA looked at it, determined that they should have charged GST, and assessed them with $77,000 in GST collectible on the sale of the condo. Like, what? So the property was a long-term rental, which isn't GST applicable, for around 10 years. It was only an Airbnb for a year, and they were assessed with more GST, $77,000, than their total Airbnb revenue for the entire year. Well, they weren't happy with this, and so they took the CRA to court, and it made it all the way up to the Tax Court of Canada, and the court agreed with the CRA's position. So think twice about GST when selling your property. As a side note, if someone buys your property to use it as an Airbnb, then they can avoid paying the GST if they are a GST registrant and if they sign an affidavit that they will self-assess the GST. And so if it's a property that's really unique, that's great for an Airbnb, you sell it to another person that's Airbnb-ing it, GST is probably not a huge deal on that sale. Second event, changing the use of your property from short-term to a long-term rental. This change in use, and that's an actual term, change in use, can result in GST owing on the full fair market value of the property, even though you haven't actually sold it. So let's say that your property is worth 400 grand. You could get hit with a $20,000 GST bill just because you changed it from a short-term rental to a long-term rental. Crazy. So you don't want to be going back and forth between long-term and short-term rentals on the same property. Just pick one and stick with it. Third taxable event would be moving into your Airbnb. This is also considered a change in use, which could trigger GST on the full fair market value of the property, like that second event. But this would also trigger something called a deemed disposition. Essentially, the CRA considers that you have sold the property and you can get taxed on that sale. And I'm not just talking about the GST, but if it went up in value, you can get taxed on the actual gain. So let's say that you bought it for 400 grand, you sold it for 600 grand, there's a $200,000 capital gain on that property. You can get personally taxed on that gain. There is an election that allows you to defer that gain and so not pay the taxes on it until you actually sell the property, but you have to meet certain conditions. The property has to become your principal residence. You can't have claimed capital cost allowance, depreciation, etc. Fourth event would be renting your principal residence as an Airbnb. There can be a couple different scenarios with this, but let's talk about a scenario where you buy another house and you keep your current home as an Airbnb rental property. This is fine. You can do this, but make sure to tell your accountant, because this again would be considered a change in use and there'd be a deemed disposition where the sale of that property would need to be reported on your personal tax return. Thankfully, in Canada, Canada, you likely won't be taxed on this as long as you meet all the conditions required to claim the principal residence exemption. But that has to be reported on your personal tax return. And a lot of times, if you're doing your taxes yourself, you're using H&R Block, or you're not telling your accountant what exactly is going on in your life, this will get missed and there can be some nasty tax consequences. That was a lot. As you can see, sales tax in Canada is complex. It's not straightforward. There's a lot of risk, especially when it comes to short-term rentals. So make sure that you talk to a good accountant that understands these concepts before getting too far into your journey and before doing any of those events that can become taxable. Hopefully this helped you out, and good luck Airbnb or short-term rentaling, whatever you're doing. Thanks for joining me. Until next time.